Welcome to this Finance Fundamentals workshop, delivered in conjunction with Staffordshire County Council Succeed and Grow scheme. I'm Rebecca Beaver of RBMA Consultancy, and I'm going to be handing over to Associate Consultant Sally Gill, who will deliver this session today.
Thank you, Rebecca. Good morning or good afternoon to everybody. So, as already alluded, my name is Sally Gill. My main background is primarily in education, mainly within the academy, trust and multi-academy sector, managing all elements and aspects relating to finance, and then eventually becoming a Chief Finance Officer for a trust of over 3,000 pupils. So why is this relevant? Well, academy trusts have to run like businesses and are completely responsible for all elements of their own financial management and have to undertake all elements and transactions associated with running a business. For example, budget forecasts, bank reconciliations, cash flow, accounts payable, etc. Compliance with both financial and governing legislation is also key. As such, there is a similar pressure as there is in the private sector to ensure that the organisation runs with good business acumen and meets all of the compliance requirements. I now run my own consultancy business as a sole trader, and I have experience of managing my own business and financial management that goes alongside this. So, the aims of this session. Realising that there are many elements to business success and growth, today we are specifically covering those elements relating to the basic financial operations of running a successful business, and how embedding these will help your business succeed. Success is different for all of us. For some, success is simply bringing in a stable income and keeping our roof over our heads. For others, success is growth, expansion, and possibly diversification. Whilst many businesses would consider reputation, marketing, and branding the key driving elements for success and growth, these factors can only succeed if they're underpinned by sound financial awareness and embedded processes. We'll also cover basic cash flow and why this is so important in informing your future planning. Ensuring that you are aware of the importance of your financial instruments. For example, what do you have in place which secures your payments and your income? But we'll come on to that further in the presentation. The key word throughout this presentation is embedded. Once we know something works and can be relied upon, that we embed it into part of our regular business cycle. As already touched upon, for some, financial viability may just be simply to be paying your mortgage or rent and having enough money to live off. That is, once all taxes and commitments have been paid. For others, financial viability means ensuring all of the above, but also having to cover the costs of suppliers and services and potentially salary costs of employees and/or associates. In any business, there is a natural ebb and flow of income and expenditure, and more importantly, the available cash for us to be able to meet our commitments. We need to be able to clearly identify and establish, does what I do or what I'm going to do provide me with enough income and available cash to be able to succeed? So how do I know? How do I know that what I want to do or I'm planning to do is going to be financially viable? All businesses, regardless of size, should have a clear written business plan. This does not have to be lengthy or complicated, but it should set out the broad aims and objectives of the business and how it aims and plans to achieve its goals. Having a clear business plan in place provides greater security for potential lenders and is essential if you want to secure any additional funding. Lenders will want to know that you have a clear plan of what it is you are doing and how you are planning to succeed. This may even include mortgage lenders. Even if you have a mortgage, negotiating further fixed deals will be difficult to secure without a business plan and other underpinning documentation. For some, the business plan may be to simply survive and have a small surplus or break even. For others, it will inform the basis of growth, but for many, it will sit somewhere between the two. Then there is the budget plan. The budget plan should link to your business plan. It should provide a numerical statement or financial forecast of how the business will be funded and by what means. The budget plan should also clearly outline the costs to the business during that same period. It should be realistic and cautious about both the assumed income and the expenditure. Typically, a slight under-assumption of potential income and a slight over-assumption of cost can be considered prudent. For growth and for best practice, budget plans and their financial forecasts should be regularly reviewed. E.g., we call this budget monitoring, and it can be done either monthly or quarterly, depending on your business and level of turnover. Your budget plan should also extend into the medium term and beyond, for example, 3 years. And to clarify what we mean by financial or fiscal year, most businesses will run alongside the statutory financial year of April to March. However, businesses registered with Companies House can set their own year end and will have different filing deadlines depending on when this year end is. And we'll touch on more on that later. So a little bit more on the budget plan. We will all have a different view and way of doing this. Ultimately, we'll all have a plan, but to what level and what detail? And can it be relied upon? Will others believe it, trust in it? Okay, so we've all thought that, but hopefully our plans are a little bit more detailed than Del Boy's. But you can't knock him. He did have a goal. He had an aspiration. He had an aim. And that's where the business and budget plan should start. Although, to be clear, it wasn't through his business acumen that he made his million. So the financial planning process, where on earth to begin? You may already be established with producing, forecasting and monitoring your own budget plans. But if this is something new or something you want to develop, then for any business there needs to be a starting point in terms of gathering the information needed. After all, a little bit like Del Boy, there would be nothing stopping us to say that this time next year we'll all be millionaires. So knowing your information, doing your research on your client base, knowing what things will cost, your overheads, seasonal influences, market influences will all help produce a more realistic budget plan. For established businesses, which may not be quite so prone to external influencing factors, then that research may well be based on past performance of X and Y. If I just go back to an example of my own, when I was in the academies and school sector, one of the key benefits of managing the finances was that there was a degree of certainty of when the income would be due, along with the payments and when. But not many businesses will have this luxury. I'm just going to pause very slightly on this slide, as the illustrative shows a good example of what to include and consider and in what order. Okay. With your budget plan, it's really important to have a budgeted versus actual. This helps inform and fine-tune for future budget planning. In year one or in early years, the budget plan may have to be a bit of a best estimate, but as time progresses, using the data from your budget plan, for example, your actual versus your budgeted, you should be more equipped to prepare a more accurate budget plan, which will aid in planning, development and growth. It will enable you to know when you might be able to afford that new piece of equipment, kit, staff member, new premises, and plan these costs in accordingly. For many, a spreadsheet does the job perfectly well, but depending on the size and complexities of your business, specialist software can be used to help plan the budget and monitor the forecast. Some are all encapsulating and tie together the bank reconciliation and the cash flow, providing what is known as real-time forecasting. Many small businesses can also access free software provided by business banking. Many now offer all-in-one service whereby the banking app itself will tie up your invoices and your payments. So explore what is on offer for you and don't reinvent the wheel or spend money on something if it can be provided for free. Speak to your bank. Many are now very geared up to support business needs and are offering more services to get your custom. Many small businesses thrive pretty well on the free financial tools and software now provided through their business banking apps and software. It is vital that within your business plan and within your cash flow, you build in and make allowances for tax and other liabilities. Depending on how your company is set up and your level of turnover and profit will affect how much and when you have to pay. It is advisably essential to set aside at least 30% of all income to cover your tax and NI liabilities. Additionally, it is wise to ensure that you're contributing towards a pension plan, and you will need to decide what is affordable. Any private pension plan may need to be flexible and fluid in the first few months or years of trading, but should still be given a high priority and be regularly reviewed in terms of maximising your retirement options. So now you have a detailed business plan and a budget plan. Great. Hopefully nothing's going to stop you now. But out there are threats. Threats will vary depending on the nature of your business. You can't eliminate all threats, but being aware of them and having a plan to manage and or reduce them is essential for ongoing success. Cybersecurity, internal fraud, theft. We've all heard about the current high levels of shoplifting, for example. Then we have pandemics and war in other countries. This can affect the supply of goods and the cost. Pandemics and war in our own country. Nothing should be off the table in terms of analysing the risk. We have, after all, experienced a pandemic and the massive impact that had on businesses and the self-employed. You should also factor in government changes and policy. For example, the recent NI increases to employers. All these things can affect your business. Competition. Has somebody 5 minutes down the road just started up a similar enterprise? But we will touch on risk a little bit later on. We're just going to focus a little bit now on the importance of cash and liquid assets. To be clear, this doesn't mean necessarily having wads of available cash under the bed or stuffed down the sofa. If you want to, you can, but it does equate to knowing and having available liquid funds, physically or electronically. Key and crucial to all business success is understanding available cash and cash flow. This will be led initially by the budget plan and supported by regular bank reconciliations. For example, what is in the bank now? Have my creditors been paid? Have my creditors paid me? Have my debtors been paid? Backed up by cash flow forecasts. What will be in the bank? What is my available balance tomorrow, next week, next month, next year? It is strongly advisable to have a separate business bank account. Your business income and expenditure should be separate from your personal transactions. And as discussed, most business bank accounts now offer an array of other services and software to support your business. Tax. Not to repeat myself too much, but remember to set aside money to pay HMRC. How much you pay, again, will depend on your business setup, your turnover, your profit, your allowable costs, etc. This can be a complicated area. Rule of thumb, 30% is generally advisable, but it is strongly recommended that you do your research so that you get an idea of what you need to be saving or setting aside. The HMRC website itself is a really good place to start and provides most of the information and guidance you will need. But if you are still unsure or struggling or simply want professional guidance, hire an accountant. Your budget plan may state that in year one, your turnover will be £100,000. So what? When? Equally throughout the year? Seasonally? This will see some significant fluctuation throughout the year. The cash income is also known as inflow. However, equally important is understanding the timing of your costs and your overheads. These are known as the outflows. So what can affect your cash flow? Your financial instruments. These are your payment terms. Are your payment terms suitable and are these clear on your invoicing and or in any contract? Where possible, get formal written agreement, email, official purchase order, or even a contract agreeing the cost, the price, and the payment terms up front before any work is undertaken. Are you on top of who owes you money? With income, it is important to factor in potential lulls in work. This can be due to seasonal variations. For example, if your main business is to sell Christmas trees, the bulk of your annual income and costs will be in the winter. And the income will likely have to last you for the remaining year. It is also likely that some of our identified risks may also factor into our cash flow as part of our mitigation of those risks. For example, assuming low levels of income during key holiday periods, for example, summer and Christmas, or during your own holiday periods. It's important, if possible, to ensure that you maintain reserves in your cash flow to cushion the ebbs and flows and to secure against any unforeseen circumstances. For example, what if you are unwell? And again, I'm sorry to sound like a broken record, but don't forget, as mentioned under cash, you will need to be setting aside for your tax payments. Every business's cash flow will be different. Some may be very stable each month, some may be seasonal. Other businesses may have more of a steady and even flow throughout the year, while others will have peaks of income and peaks of expenditure. The example on the slide is basic, but it shows the general principle. Ideally, each month should be broken down into 2 columns, which is not shown here, which should ideally show the expected and the planned cash flow and the actual cash flow. Cash flow in business terms is also known as inflows and outflows. It is the summary at a given point in time which shows the inflow and the outflow of the cash. That given point in time is also crucial as to when you do or monitor your cash flow. For some, this might be daily, for others, weekly, and in some cases, monthly. It allows you to see ahead and to plan. If in 3 months cash flow looks like it could be a bit tight, what can be done about it now to help cushion that? For example, do I need to cut back on my spending or move savings, etc.? It allows you to prioritise. It's crucially important that you are aware of your cash situation throughout the year, as your income might depend on it, employee salaries may depend on it, and it also means that you may not be able to buy stock or run your business without it. I'm just going to spend a few moments talking about risk. It's a massive topic in its own right, and I don't want to distract from the financial fundamentals of what this session is focused on. However, risk affects us all and affects all sorts of businesses. Bottom line, if something goes wrong, it will likely impact or hurt your income. But likewise, on the flip side, taking risk can help grow your business and increase your income. Most take a middle ground with risk. Planning, insight, research, insurance can all help reduce or even fully remove the negative impact of risk by either managing the likelihood or the impact. We call this mitigation or managing the risk. If you are watching this on the recorded version, please pause the video now and watch the link to the risk video. If we avert all risk, we would probably cease trading or operating. Running a business and a company is full of risk. The key is to identify the risks and understand the likelihood of something happening versus the impact it would have if it does. The result will then lead to one of 3 actions, either acceptance, mitigation, or removal. And this is known as the risk appetite. Without understanding and managing your risks, you potentially jeopardise your future success and certainly will prohibit growth. Many of us, particularly sole traders and small businesses, will be aware of the risks, and we're likely already very aware of these and have compartmentalised and managed these in our own mind. It's not to say that you must have a written, documented, fully live risk register. In some cases, depending on your business, maybe yes, but for others, it's enough to simply be aware. However, showing your understanding and documenting some of your mitigation strategies within your business plan will show any potential stakeholder and/or lender that you are thinking about the bigger picture. So moving on to financial reporting and returns. There are different types of financial reporting, but the emphasis is the importance of getting these right, and that will depend on how you are set up. As mentioned in previous slides, if you're unsure, speak to an accountant, and this could pay for itself in terms of advising on allowable expenses. It's a scary fact, but bankruptcy is often not because of the turnover or how hard somebody has worked, but generally down to poor financial planning or budgeting or cash flow. Quite often, companies go bankrupt because they can't meet the demands of their financial obligations in the form of taxes and other payments to creditors. It's really important to keep clear accounting records. As the slide there shows, you must ensure that you have clear invoicing, sequentially numbered invoices containing the detail of the work and the cost. Make sure you keep copies of everything, physical or electronic. Keeping a log, spreadsheet, or recording all invoices and their value and all your costs. As I've mentioned before, if you feel uncertain or not confident, then hire an accountant. Loans and grants. Many local authorities and local councils are given or provide grants to support local businesses to help promote local growth and local economic growth for the area. Grants usually have to fund a specific project or aim, such as marketing, but some can support other elements of the business. To apply for any grants and loans, the lender will want to see your business plan. Speak to your local council or search their website for further advice or support. Alternatively, Google any other local business support offers available. So to summarise the presentation, have clear objectives of your business. Ensure that you have a realistic budget plan. Regular bank reconciliations and cash flow forecasts. Understanding your governing articles and complying with them. Know your risks, which ones to take, which ones to avoid, and research what grants and funding are available to you. Thank you for watching this presentation. If there are any questions, these can be posted onto the portal and we will answer them shortly.
Thank you, Sally. That was a really informative session, and we really hope that you've gained some insight into how to support your business to succeed and grow through strong financial strategy and operational practice. If you do have any questions, please pop them into the chat function on RBMA forum and we will come back to you. Talk to each other and share advice and knowledge about how you have ensured that your business is financially sound. We hope you've enjoyed the session today. Please do look at our other topics on RBMA forum, and we wish your business every success.